Our chief equity strategist and economist, John Blank, has a plan to end the trade war with China. We were sure you'd want to hear about it, so we got him on the telephone here. John, let's get right to it. You actually have three possible solutions, right?
Right. This, the first thing I want to point out to people is that when we're talking about the stock market with respect to the trade war, there's three components to a deal, and only one of them actually matters for the stock market. So let me get through these. Number one, intellectual property. The FBI says there's 1,000 complaints against Chinese companies for stealing copyrights and trademarks and patents and just know-how generally from firms in the United States. I'm sure there's more from other countries that have similar experiences. So basically, this is a violation of their agreements with the WTO to play by the rules. So this is long-term. This is an investigation that the FBI would have to get in jointly with the Chinese authorities and sort out what is happening on 10, 15, 20 different buckets of intellectual property decisions. It takes years. So number one, that is the biggest issue. But it's not one that can be resolved quickly in any sort of deal. So it doesn't have a stock market effect. Number two is we've got the tariffs themselves. This is stock market driven. And so what I want people to focus on in terms of whether the stock market goes up or down is if tariffs disappear. This is something that is the only thing people should watch. If they do not disappear, the stocks will not rise. And if they do disappear, they will rise. So the second component is the tariffs themselves. And I think they can go in advance of a deal on intellectual property as kind of something that can set the stage and get global growth returning. So you have to watch that on its own. Third issue is the size of the trade deficit with China. What I want people to understand here is this says, we saw it today, again, the trade deficit grew in the latest figures. Even in the face of all the tariffing, even in the face of this trade war, it grew. And the reason is because the federal deficit grew. And it's how people understand that it's macroeconomic accounting. And when countries overspend, particularly from federal deficit spending, they will overconsume, and they will overconsume on imports, and they will come from China in this case. So, again, the only way to cut that down is to cut the federal deficit down. That is unlikely to happen in the face of all this impeachment stuff and in front of an election by next year. So there's very little chance of the actual trade deficit declining in front of this election. So the point is, really, all you need to focus on is whether tariffs are being lifted or not for stocks. And that is really the nut of what needs to come out of a deal for the stock market perspective. The other two, frankly, are separate issues, and both don't look like they're going to be resolved before the election.
And those are all the possible scenarios that could play out, right?
That's it. I mean, look, we don't know in this murky environment what's going to happen. But at the end of the day, if you want a signal that really would be picked up in the face of uncertainty, you have to see tariffs lowered and lowered demonstrably by both China and the U.S.
Any way of gauging the probabilities of success for these scenarios?
I put a probability of this getting higher, actually, in the face of this impeachment proceedings, because I think there will be more incentive for the president to put a deal in front of his base. So I would say we're now, if I put 20% a month ago, I would say 30% chance of a trade deal, at least lowering tariffs. I don't think the other, like I said, will be resolved in any case in any way until after the election. So
is trade currently the biggest hurdle for the global economy?
I think so. I mean, it's certainly something that seems to have really put the momentum heading in the wrong direction in a lot of parts of the world. And I cannot imagine another shoe dropping as big as it. And I cannot imagine how it gets turned around without it going away. And so, yes, I think the answer is yes. I do think it's the biggest problem.
And in the face of this, the stock market still seems in bull mode. Does that surprise you?
Yeah, it is and it isn't, Terry. We've been 20 months with flat stock markets with a lot of volatility. So what's happened with the trade war is we've gotten a lot of volatility, a lot of risk, and no return from this whole endeavor. And frankly, that is not a good scenario, and it's probably the one that can continue, which is neither bull nor bear is going to be right. We're just going to waffle around through a lot of volatility until the election. That's what I think.
So the longer this lingers, are we going to see more and more investors moving to the sidelines?
We already seen it. it yet. I think more and more will just start taking cash out of the market or taking risk out of the market and sitting in cash, and then more and more people are just going to trade the ranges that are playing out on these stocks that are pretty consistent.
Looking forward a bit, do you see any possible solutions coming from the mid-October meeting with the U.S. and China?
Well, Terry, there's the bull case. If you have a chance for a bull case, you need to see in advance of that meeting the tariffs get lifted, or the tariffs get lifted at that meeting, and some type of deal moving forward, or at least the framework to make a deal move forward. So we've heard this for 20 months, so I think it's going to be a very, very skeptical stock market. We really need to see action. And like I said, action on the tariffs is what we need to see most. Talking
stocks now, you are eyeing up Roche Holding AG, Rent-A-Center, and Avery Dennison.
Right. Roche, again, drug stock, a Swiss drug stock. You've got to like it. Again, because it's European, if you get there's such beaten down shares, you can hold this stock, earn its dividend. It's a great play. Rent-A-Center, this stock has been doing incredibly well in the United States, and as long as the United States holds up, you've got to like that stock, and it's been a reasonably good play for a long time. So I think you just got to believe in it holding up for a little bit longer. Avery Dennison is just a great company, and a great stock tied to a great company is a good one for investors to think about. I always look to what the company actually does and how sustainable their business is. And Avery Dennison is one of the best, so I would keep that on any investor list.
That's the latest on the global markets with Chief Equity Strategist and Economist John Blank. With John, I'm Terry Ruffalo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.